Hey everyone, it's Dr. Johnny here. I'm the host of this channel, The Walk of Wealth, and on this channel we educate dentists on how they can invest in real estate and other alternate assets to develop true financial freedom through passive investment. And today we're diving into one of the hottest asset classes in the investing world right now, and that's data center real estate. With AI, cloud computing, and digital everything exploding, the demand for data centers is through the roof. All the big three, Meta, Amazon, Alphabet, are spending literally tens of billions of dollars on AI. They see this as the next big thing, the next internet. And so as a result, there's tons of money, tons of interest in AI. And guess what? That means that huge need for computing, right? AI has a very large draw on electricity, very large draw on computing power. And so to enable this AI revolution, we need tons and tons of data centers. And as a result, data centers are blowing up in this country, all over the place, huge demand. So here's the big question though. Just because it's trending, does that automatically make it a smart investment? Well, let's talk about it. Now, you've probably seen the headlines. Data centers are the new gold rush. That was in the New York Times. AI is fueling record demand. That's hosted by The Economist. And yes, it's true. Like I said, Amazon, Google, Microsoft, they're racing to secure data storage and processing capacity. And we're talking about billions of dollars flowing into these assets. So it's easy to see why investors are excited. Long leases, sticky tenants, and a tech-driven future. Sounds like a no-brainer, right? Well, not so fast. Just because a deal involves data centers doesn't mean it's profitable. Let me say that again. Not all data center investments are created equal. You still got to ask, what market is it in? Who's the tenant? What's the cap rate? And most importantly, the most important thing, are we overpaying just to chase a trend? Right? This is where the height of the market, the euphoric, people start overpaying right before things go bad, right? The other people exit. So currently, present day, competition is fierce. Institutional players are bidding up prices and driving down yields, right? They don't care about getting 2-3% return on their money. And so as a result, they're paying very high. As we know, cap rates are an inverse relationship with the value of property. So as the yields go down, cap rates go down, the values go up, and institutional players are paying top dollar. And that is what can make it really tough, even dangerous. Because for smaller investors who don't know the space, buying the right asset at the wrong price, it's still a bad investment. Warren Buffett said, it's better to pay a fair price for a good business than to pay a good price for a fair business. Now, there are some legit reasons to love data centers. They're mission-critical infrastructure, right? Tenants rarely leave. You might sign a 15-year, 20-year lease. If you're in a tier 1 market like Northern Virginia or Dallas, demand is off the charts. But there are also risks people overlook. You see, one thing is technology changes fast. A facility can become obsolete if it's not upgraded, right? We had recent news that China has come up with an AI model that runs at a fraction of the computing power that American chatbots like OpenAI, other companies like that have, right? They use much cheaper, much lower computing power, and it's called DeepSeek. So technological shifts can also happen very quickly. Now, the other thing is power and cooling infrastructure are complex. This is not your average industrial box like a warehouse. You just build 4 walls, maybe do some partitions and throw huge HVACs in there. No, this is very important, highly technological equipment that needs to be kept in right climates and have the right amount of power going to it. So if you're in a regular place, you have to build ways to bring enough power to these infrastructure, right? The infrastructure is very important. And not all tenants are created equal. A Fortune 500 company is leasing from you? Great. How about a crypto startup with a 12-month runway? Not so much, right? So who the tenant is makes a big difference. Plus, let's be real. Some investors are buying deals or investing just because the word data center is attached. But guess what, ladies and gentlemen? That's exactly how bubbles form. And from my perspective, this looks like a bubble forming. So here's my take. Yes, data centers can be a great addition to your portfolio, but only if the deal is in the right market, you're not overpaying, the operator is deep-pocketed and knows what they're doing, and the tenant has a strong track record. Otherwise, you're not investing, you're speculating. And on this channel, we're not speculators. We're investors, we're data-driven with our investment decisions, and we try to reduce the risk by doing it this way, right? Speculation and chasing headlines and chasing hype is a sure way to start losing money. Now, if you're really serious about getting into this space, investing in this space, and working with experienced operators who've actually done it before, you gotta be able to ask the hard questions. And don't get swept up in the hype just because AI is all over your feed. If you found this helpful, please hit the like button and subscribe for more no BS insights on real estate and alternative investments. You have any questions about a deal you're looking at? Drop them in the comments. I read every one of them. And remember, it's not just about what you invest in, it's who you invest with and how you buy it. All right, guys, hope that was helpful. I'll catch you on the next video.